Hello everyone and Assalamualaikum and welcome to Malaysia, Dr. HAZILA, BINTI, ISMAIL and all my fellow friends. Thank you for being here today, and I ASMA binti Cik Muhammad RAZALI. My matric number 019649186, and now I would like to present about the development and framework of microfinancing Malaysia and Indonesia. Let's start. One is introduction. Islamic microfinance combine the idea of financial inclusion with the Islamic financing principle. Cost plus say muharabah, interest-free loan, Qard Hasan, and as our recent and forward sale, salam and istighna are frequently employed ijarah. Islamic microfinance or Sharia compliant microfinance is a provide low income community and financial service, and they are Islamic finance principle. Islamic finance is intelligent integral finance in many ways. The overview of selected industry is both country. Microfinancing Islamic in Malaysia. Skema Pembiayaan Mikro is a microfinance program that offer quick and simple and access to company. Funding for partner financial institution up to 50,000 without the need for collateral. The end microfinance facility that provide financing at cheaper rate. This program has support for the financing requirement of micro enterprise and self-employed people since 2006. Microfinancing Islamic in Indonesia. The largest Muslim national industry has the highest distance road and the microfinance industry that has developed over a country. Islamic Commercial Bank, Islamic Banking Unit, Rural Bank and Financial Cooperative all first appear in the field of Islamic in Indonesia. Financial Institution Service to Poor and New Poor with the legal protection. Lembaga Kewangan Mikro, LKM.
My name is NORFAIZAA. Today I'm going to talk about the milestone and performance of Islamic microfinance in Malaysia and Indonesia. We look into the timeline. Milestone in the rise of Islamic finance. Islamic finance has grown to a $1 trillion industry after taking off in the private sector in Gulf states such as Dubai in 1970s. The Sharia law compliance system, which prohibits interest in the national norms in Sudan, Iran, and in a parallel banking system in Malaysia, Bahrain, and a few other Gulf states. In 1950 until 1960, first experimentally Islamic bank interest-free saving loans and associates in the Pakistan and the Indian subcontinents. Egypt and Malaysia saw pioneering venture in 1960s. New bank develops during the 1970s as oil money pouring in a Gulf state. In July 1983, Malaysia opened a first official Sharia-compliant bank, Bank Islam Malaysia. Other banks also offer Islamic product and are supervised by Central Bank, which is advised by a board of Sharia scholar. In 1991, Indonesia's first official sponsor Islamic bank, Bank Muamalat, is established. 2001, Malaysia Financial Sector Master Plan set the target of Islamic finance to make up 20% of the finance sector by 2010. By 2009, its share of financial assets was about 70%. In January 2009, Singapore launched first bond program as it advised with Malaysia for market share. In February 2009, Indonesia, the world's most populous Muslim country, sold its first retail Sharia-compliant bonds or sukuk. The milestone of Islamic microfinance in Malaysia. The milestone. AIM and Bank Rakyat are the two principal Islamic microfinance institutions in Malaysia. AIM was modeled after Asia's first government bank. Bank Rakyat is the largest Islamic cooperative in Malaysia, was the first cooperative to offer an Islamic pawnbroking service in Malaysia in 1993 under the name Ar-Rahnu. The milestone, AIM experienced a breakdown in its goal for 7 years between 1992 until 1999 due to the misuse of finance to political supporters. AIM launched of two new loan program, Scheme Pinjaman Nelayan (SPIN) and Scheme Khas Ibu Tunggal, then have been reported of loan leakage (SKIT). It's because the borrower could not afford to repay the loans, many of them uncollectible. Since 2004, AIM has worked hard to embed the public trust. As a result of this effort, AIM is now among the most exemplary MIF in the world. The milestone of Islamic microfinance in Indonesia. In Indonesia, Islamic microfinance was first launched in the 1990s. 49 over 55% in 2017, different microfinance service and their providers are continuing to expand. Islamic banks and microfinance organizations were the most popular models during the 1990s revival of Islamic finance. Subgroup of financial institutions that offer microloans may be identified in Indonesia as Islamic banks, Islamic rural banks known such as a Bank Perkreditan Rakyat Syariah, Islamic financial cooperative such as Baitul Mal wa Tamwil (BMT). Referred to at the time as Baitul Mal wa Tamwil (BMT), grow to include over 3,000 BMT is in less than 10 years. According to data from 2017, it is expected that all microfinance institutions collectively provide finance worth Indonesia rupiah 37.34 trillion. The largest share which came from KSPPS or BMTs was 91.88%, while the Islamic Rural Bank's BPRS contribution is slightly higher than the zakat collection, which are 20.79% and 60.97% respectively. The performance of Islamic microfinance in Indonesia and Malaysia. The performance in Malaysia. The improvement in human capital development, education and skill development, the provisions of physical capital, and increased access to microcredit for the productive poor are all expected to result from the Islamic microfinance movement campaigns for the financial inclusion. Large rise in the customer household income has been seen, which has improved their standard of living, corroborating proof that microcredit help to fight poverty, increase income as well as a non-income factor including children's health, nutrition, and education as well as gender equality and women empowerment. Performance microfinance in Indonesia. The number of Islamic microfinance organizations has significant growth after more than 15 years. The biggest concentrations of Islamic banks also found in the South Sulawesi and West Nusa Tenggara in addition to Java Island. High competition between microfinance institution and Islamic microfinance institution has piqued the interest of many practitioners and academics who regard service quality as an essential criterion. Microfinance institutions are expanding by implementing their operation in accordance with Sharia law. Customers rank companies based on their performance.
Bismillahirrahmanirrahim. Assalamualaikum. I'm Faiza. My part is the Sharia framework governance in both countries, which is Malaysia and Indonesia. The Sharia framework governance in Malaysia, beginning in 2011 as the most recent amendment to Islamic banking law, PNM specified in detail the framework for Sharia governance, including the number of Sharia board member to be appointed, 3 members, the member qualification, the board obligation and responsible, and their relationship to the financial institution they serve. The framework also has control for risk management, Sharia review, and Sharia audit, which offer an impartial assessment of all necessary policies and practice. The Security Commission regulates financial intermediaries, such fund management firm, asset management firms, and issue of financial securities in the capital market. The Sharia Board of Bank Negara and the Security Commissions are prohibited from allowing its members to serve and Sharia committee in the same business of or financial institution. They may only have board position, banking or takaful. Multiple appointments are prohibited scholar out of concern for secretary and to avoid interesting conflict. Only the Sharia Board of Bank Negara and Security Commission in Malaysia have the power to give fatwa on any subject pertaining to Sharia contract. The civil court has authority over dispute and proceeding involve clients in an institution of Islamic banking. Meanwhile, the Sharia framework governance in Indonesia, the Sharia board shall be established by takaful firms, each Islamic bank and all conventional banks providing Islamic financial goods and services according to Article 32 of the Indonesia Sharia Banking Act from 2008. The Indonesia Ulama Council approved the Sharia board members. However, the general shareholder meeting of the institution they work for must also accepted the nominees. While the National Sharia Board and Bank Indonesia both suggest and approve the International Sharia Supervisory Board member of Islamic financial institution, only the National Sharia Board established by IUC has the jurisdiction to issue a fatwa in Indonesia's Sharia governance system addressing any issue pertaining to the goods and services provided by Islamic financial institution.
Hi and Assalamualaikum. My name is NORANIZAH binti Nassir. I will continue to the overview of the operator or company in both countries. In Malaysia, we all choose a Agrobank, which is a major player under Bank Negara Malaysia in the Malaysian agriculture finance industry that headquartered stated in Kuala Lumpur. Begin with Muda Agriculture Development Authority, is where Bank Pertanian Malaysia was founded in 1969 to fund irrigation project to support double cropping for paddy cultivation. Bank Pertanian Malaysia became a government-owned bank under the control of the Minister of Finance on December 19, 2007, and then Agrobank formally transitioned transition to become a fully fledged Islamic bank on July 1st, 2050 that's supported by Sharia compliance business activity. The next is Bank Syariah Indonesia. The historical day of February 1st, 2021 commemorate the union of Bank Syariah Mandiri, Bank Negara Indonesia Syariah and Bank Rakyat Indonesia Syariah into one organisation, which is Bank Syariah Indonesia, stated in Jakarta, Indonesia. This move is anticipated to spark a new wave of economic growth at the national level and improve community well-being. The second one is the product offered by the company. For Agrobank Malaysia, the product is Agro Musim Islami MEF. Product offer for enterprise on and operate by micro entrepreneur who are both new and returning customer, accepted for unsecured term financing provided. This product makes us of the two-scale contract tawaruk concept. The sale of asset by the seller to the buyer on a delay basis is the subject of the first contract. Then sell the identical item to the third party for cash and another method of payment. Then the bank sells the item to the consumer via murabaha, which cost plus profit with postponed payment. Then the customer hire the bank as his wakalah or agent to sell the good at the cost to the third party in cash. The amount of financing the customer requires will be deducted from the sale and credited to their account. The eligibility requirement is customer in business sector that operate more than 2 years and must have been in business at least 24 months. Advantage is a funding limited funding up to 50,000 ringgit and period up to 60 months. Okay, product offered by Bank Syariah Indonesia. First is Mudarabah Financing. A bank will finance a business or project using 10% of its cash as capital. The ratio that will be used to distribute the business profit was decided upon at the commencement of the contract. At each agreed upon moment, a portion of the customer revenue will be given to the bank. The second one product is a Musyarakah Financing, agreement of cooperation between two or more parties for particular business in which each party make a financing contribution with the understanding that both profit and risk will be shared. The third one is Murabaha Financing. The bank act as a seller of good, although the potential customer, which is the third, is the buyer. The bank profit margin is adjusted to the payment term or installment until paid off, since the sale and purchase are not made in cash at the time of the transaction. Even if the market interest rate increase over the period, the amount of Murabaha margin remain constant. The third one is Istinah Financing. The consumer give to the bank an order for development and bank instruct the developer or contractor to build the request home. Depending on the development work, the bank will pay the developer or contract in installment. The client will pay in full or installment when the item are complete and given to them, since the bank will require them as a fixed asset. And the last one is Mutahiyah Bil Tamlik Ijarah Financing. The bank will purchase item that will be classified as ijarah asset and rented to client. Then consumer will pay for the agreed upon amount on time until the bank own the property and the assets still held by the bank and will transfer at the end of the lease period. Thank you.
And challenge is the selected industry of both country. Microfinancing Islamic in Malaysia. The first one is ethnic issue and mission grade and commercialization. Second, legal restriction from deposit taking activity. Next, suitability of sources of the fund. Inflexibility in loan scheme, segregation of Islamic and FI from mainstream banking. Next, microfinancing Islamic in Malaysia. The first one is making a low-income community as a target. Next, making a woman target. Next, developer a variety of method for selling financing to low market community. And the next, doing organization changes. Next, looking for the new sources of the funding. And the last one is environmentally friendly.
As the conclusion, this paper compares Malaysia's microfinance system and product offered with Indonesia. Malaysia and Indonesia, microfinance Islamic institutions are subsidized by the government, offered limited microfinance Islamic product, and have standardized lending contracts. It is believed that Islamic microfinance goals go beyond financial success or profit. Their goals include spreading the gospel and spiritual Islamic propagations. Da'wah is carried out through offering resources and services that are in the line with Sharia, which is Islamic law, by disseminating a knowledge about Islamic finance, which is founded on Islamic principles and values, and by paying zakat, Islam, and making charitable donation. The performance metrics are thought to be more comprehensive and than those used by traditional bank in order to attain goals of achieving social well-being, profit and expansion, considered crucial.